Here are 40 must-know facts to pass the life and health insurance exam. Grab this as a free cheat sheet, just search PrepPass.org. Let's go. Federal COBRA applies only to employers with 20 or more employees. A core HMO feature is the gatekeeper PCP who coordinates and authorizes referrals to specialists. A point of service, POS, plan blends HMO and PPO features. An HRA is funded solely by the employer, not by employee salary reductions, and is owned by the employer. A copayment, copay, is a fixed dollar amount the member pays at the time of service, regardless of total charges. The ACA prohibits both annual and lifetime dollar limits on essential health benefits. Divorce or legal separation is a qualifying event that affects spouses and dependent children. The UPPL, codified beginning at Cal. The incontestability window for individual ANH policies is 2 years from the date of issue. The standard grace period is 7 days for weekly mode, 10 days for monthly mode, and 31 days for all other modes. The insurer must supply claim forms within 15 days after receiving notice of claim. The misstatement of age provision is a corrective remedy, not a voiding remedy. A non-cancelable policy locks both the premium and the renewal right. The birthday rule looks at the month and day of birth, not the year. COB rules prevent overinsurance. Hospital indemnity coverage pays a stated daily, weekly, or monthly cash amount during a covered hospital stay. The elimination period is the time-based deductible at the front end of a disability claim. The Affordable Care Act eliminated pre-existing condition exclusions on major medical plans, both individual and group. Accrued periodic disability income benefits must be paid at least monthly during the period of liability. Rebating is offering any valuable consideration outside the policy as an inducement to buy. Section 1749 sets the standard renewal CE requirement at 24 hours per 2-year period, of which at least 3 hours must be ethics. Section 10127.10 requires a 30-day free look for individual life and annuity policies sold to seniors 65+. California defines a senior for these consumer protection statutes as a person 65 years of age or older. Under California law, insurable interest must exist at policy inception. DMHC regulates HMOs and managed care plans under the Knox-Keene Act. LTC policies issued in California must offer a 30-day right to return for a full refund. Section 1633 sets minimum qualifications, including age 18+ to be licensed as a producer in California. Insurers limit the benefit so that the insured still has a real financial reason to recover and return to work. Short-term disability policies typically pay benefits for 3 to 26 weeks after a short elimination period of 0 to 14 days. A COLA rider increases the monthly benefit during a long claim so that the payment keeps pace with inflation. California requires every individual long-term care policy to include a 30-day free look period. California caps the pre-existing condition exclusion in an LTC policy at 6 months from the policy's effective date. In group life insurance, the sponsoring employer, or association, is the policy owner and holds the single master contract. California group life law requires a 31-day conversion privilege following termination of group coverage. ERISA is administered chiefly by the U.S. An annuity is the mirror image of life insurance. The annuitant is the natural person whose life is the measuring life for the payout calculation. A fixed annuity credits a declared current rate that is never less than the guaranteed minimum stated in the contract. A single premium annuity is purchased with one lump sum payment. Section 1035 permits tax-free exchanges life to life, life to annuity, and annuity to annuity. Want all 40 on one page? Grab the free life and health insurance cheat sheet and the full practice test. Search PrepPass.org. Good luck on your exam.